Hey, hi. How are you? All right, since you're here today, let's go on ahead and talk a little bit. I think I want to do 3 videos today. The first is going to be the most important, I think. It's going to deal with life insurance and when you need it, how much you need, and what to do after it's going to expire on you. So we'll talk about that. Next 2 videos are going to be on stocks. So I was just recently updating some of my life insurances and things of that sort. And so you start going through the numbers again, you realize, if you did well the first time around, you didn't do so well the first time around getting the life insurance, and which ones you chose. And so let's talk about that first of all. So initially you need to figure out, do you need life insurance or not? Now if you're single, you have no dependents, and you don't want to leave money to anybody, then there's really no need to have any life insurance. But if you do want to leave money to an organization or you want to leave it to somebody, then yeah, maybe you want to get some life insurance at that point. Now, for other people that do have dependents, have a spouse, have children, have any other debts, then they may want to get some life insurance so that they don't burden anybody else with any of their debts. Before we get into the plan of anything, funeral expenses, first and foremost, that is probably important for both the people that don't need life insurance and those people that do need life insurance. So if you can plan your funeral expenses and get that done and out of the way, then you don't have to worry about that, or somebody else doesn't have to worry about that. So now let's get into the main things, life insurance. What do you need to do first of all? First of all, I think sit down with your significant other and go over your expenses. Go over all the things that you owe, go over the things that you might owe, that you're planning to buy, the amount of debt that you think you're going to have as the future goes on. And once you have all those debts in order and you know how much you need to pay off, then you have a basis as to where and how much life insurance you need. And that's going to vary from family to family, of course, and from person to person. So if you can figure out that amount and then figure out the expense of what it's going to take to get your children from the grade that they're in now through college, and what it's going to take for your significant other or your spouse to survive for maybe 3 to 5 years after paying off everything, so that there's no concerns or worries on his or her part, then you have now a better basis as to how much life insurance you need. Now you'll start having to look for all the different companies so that you can get a good rate and a good life insurance. Now there's different type of life insurances. I'm going to talk about 2 here. One will be a term life and the other will be a whole life. Now when I was getting my insurances the first time around, a lot of people were saying whole life is a waste of money and no need to do that, and that term life is the way to go. Now it might be the way to go, but at the end of a term life, say you get it for 20 years, if you get that, after the 20 years, you paid in a large amount of money. At 20 years, you have 0. So now you have to start over again. Now, when you're going to start over again with a term life, guess what? Now you're not going to pay the benefits that are way down here. Your premium is going to be much higher because you're 20 years older. You might have more medical problems. And so now your term life insurance is going to be a lot more expensive. Now, if you have whole life, now the whole life is a little bit more expensive, but since you're younger, it's going to be a little less expensive at this time. And as you pay your whole life, you're going to do 2 things. You're going to have a large benefit. If you do pass away, you're going to have a good amount of money to leave behind. And in addition, some of that money is going to be saved as a cash value for you. So at the end of 20 years, now you have amount of money saved, and that money is tax-free. First of all, you can take it out if you want it and use it yourself, or just leave it there and let it grow. So at 20 years now, you have a whole life that is all paid up. If you didn't want to pay another dime into it, that money would stay there and make interest. Now you want to sign up with an insurance company that would pay you dividend. Mass Mutual pays you dividend, and as they are paying you dividend, what's going to happen is after 20 years of paying this, the dividend that you're going to be getting back is pretty high, and it can almost pay for your whole amount of insurance that you have to pay in yearly. If that is the case, then you don't have to pay another dime into it. You can keep the whole life. It can keep on growing. That dividend that they're giving you actually pays for the insurance itself, and now you have a higher insurance with a cash value that is very good, and that will allow you to get a lower amount of term life come 20 years from now, when term life will be a little bit more expensive for you because of any medical problems you might have. So there is benefits to getting a whole life, even though a lot of people say it's a waste of money. It's a good way to save on the safe side, save some money, get a company that will give you some dividend back. So that takes a little research, but I'm telling you, Mass Mutual does do that for you. And so that will be a great benefit for your family and for you. Now there's a few other things that you need to do. Disability insurance is another thing. So you have life insurance, now you need a disability insurance. So if you do not have a disability insurance at this time, I would say look into that, because for whatever reason you get hurt at the job, you can't do your job for whatever reason, you need that disability to kick in. Sometimes you can't work for 3 or 4 months because you broke a leg, you hurt yourself, you were in an accident, you were in the hospital, you're very sick, but you're able to get back to work at some point. Disability insurance will kick in and pay you your salary, or the amount that you wish them to pay you that you're paying for. If this is needed, then you're going to find it as a great benefit to have this. So you want disability insurance, you want your life insurance, and at the same time you need 2 more things. You need to set up your retirement fund. Now if your job does not have a retirement fund, then set up your own. It's easier than ever these days, because now you can invest yourself on your phone on an app like Robinhood and start collecting money, and don't even think about it. Now there is different tax shelters and benefits that you can look into and invest into those as well. But if you like to invest your own money and pick your own stocks, then do it yourself. But be collecting money and be saving money. Now, since if you're young, that can be a higher risk type of fund that you save at, because you're already saving a low risk with your whole life, and you can do higher risk with this money. So you start putting in a retirement fund, and just make sure that you know that that is a retirement fund and you're not going to touch it until it's time to retire. If you do that, you're going to see the amount of money that you have is a tremendous amount. You can save a lot of money without even knowing that you're doing it. Now the other thing that you need is cash. You need about 3 to 6 months worth of cash, because sometimes the disability insurance you can buy may not kick in for 3 months, may not kick in for 6 months. It just depends how you set it up. Some people set it up right away. They start getting it right as they get injured and they can't work. Some people set it up at 3 months, because it'll be a cheaper amount that you have to pay, and then it kicks in at that point. So these are all things that you have to think of, and that you can actually benefit from planning and trying to get this done. I'm telling you, it's very important to get it done. It's very important to make sure that your loved ones are secure, and if you do this, you'll be much happier, you'll be more secure, and you won't even miss the money, because you don't even know it's there, because it's already being paid off, and at the end of the day you'll have money at the end that you can use. And if that sounds good to you, then I'm glad that you're listening, and good luck with your future. And I will be talking to you on 2 more videos shortly.